All right. So last night I went to sleep very unsettled. If I look at the ABMD's revenues, and when I look at the Morningstar quarterly reports, and I just found out that the ABMD is about 3 quarters to report 3 quarters earlier than most companies. So the confusing part is that when you look at March 31st is the fiscal year ending. So that means many companies will close their financial year on December 2020. But this company closes on March 31st, which is 3 quarters earlier than many other companies. So now, right now, for us to compare whether this TTM result, the tracking 12 months results, or the previous 4 quarters results, will it be fair to compare with 2020? So now, right now, we are just 4.6% below, negative 4.6% below year 2020. All right, so they have closed this very, very early. So when we dig further into the results, let's say, for instance, right now, so for us to have a fair comparison is to have another 2 quarters more to be reported, right, to be in sync of year 2020 results. So, all right, let's go a bit further. Now, when we look at Morningstar, so if we look at Morningstar financial statements, and then, so yesterday I went and dig a bit deeper, and what I found out is that now they have already reported their own quarterly results Q2 2021. So they're way they're like in future. So this TTM right here is based on these 4 quarters, all right, 802. So it's not exactly a fair comparison yet for us to say that if this year will be performing better than last year. Right. So now, let's say, for instance, most companies, majority of companies, if we tabulate it, it would be actually this majority of quarterly reports, right? This January, they will be reporting the Q4 2020. But if it is ABMD, they would be reporting their Q3 2021. So now, this is their 2020 results, which is actually right, all these 4 quarters. All right, so they still have this January, this is what they will report, January 2021. They will report their Q3 2021, which sounds confusing to most investors out there. And then, all right, this is what other companies would report, mostly. All right, so then during March 2021, they would close their year 2020. All right, so we have to wait for 2 more quarters for us to compare the results, whether it's higher than 842 right here. Okay, so just to elaborate again, TTM means tracking 12 months, and also it means the last 4 quarters. So this result means these 4 quarters. All right, this one, and this one. All right, so it's not exactly year 2020 for that. Okay, so now I still like this company because it's all right. This is one of the chart that I extracted just now, that it says that it's going to report its third quarter results of 2021 in all right, and right away in future on 28th of January. All right, so it's maybe next week, a few days away. So you have a total of let's say, yeah, 2 more quarters to go. Right, so let's say whether this company is monopoly or not. Well, I do look at the bell curve, where we usually want to know, are they higher than any other company? So they are actually over here, this red color part here, which is higher than average, the profit margin. And they are 90% higher profit margin compared to 664 companies in the same medical devices industry. All right. So this company, very hardly you get it undervalued, and many sources out there, they always report this stock is overvalued. All right. So sorry, right here. 179% overvalued. But if you look at some sources, they report undervalued. This one is below the fair value line, right? So it's around maybe about 20% undervalued. So you get all sorts of mixed value in this company. So the only thing for me to take the close watch is actually the price structure and what the smart money, how the smart money is actually accumulating or actually distributing in this chart. But long term is a very strong stock. And if you look at the past earnings, you see there's a discrepancy in even the future growth projections. So, because this is not a very big company, although it's, I would say, although it's a very fundamentally strong company, you see, the past earnings growth results is about 27% compared to the industry. So it's beating the industry. Now, what it did in the future growth forecast is that the analysts, they reported lower than the industry. So this is a tricky. So because this one can always fluctuate up and down, depends whether they want to distribute or accumulate the stock. All right, because this affects the intrinsic value a lot, and whether they want to use 10 years model or 20 years model affects the intrinsic value a lot. So, all right. All right, so for the past records, they returned almost the highest gains in the past 10 years. If you compare to many of the big companies or monopoly companies. Right, financially, they are very strong. I would say if you look at the balance sheet, it's all green. They have no debts and they have assets more than liabilities a lot more times. All right, so let's see. Almost 7 times on the current ratio, right? No debts. So pretty healthy. All right, now this is the tricky part, and this is where the institutions they own, because this is a very, very, very good stock or great stock, great company. You see, they own 96% of this company, and the public only owns 1.4. They do not want the public to fight against them to accumulate the shares of this company. So that's why you don't find it in your radar. So there are many of these companies like CME or other companies, they tend to go under the radar. So publics don't own these shares a lot. All right. So you can see the top shareholder is actually Vanguard Group. So one of the biggest ETF group. Then you have BlackRock. So all the big boys are owning this stock. All right. Pretty interesting. So I wouldn't go too far because the topic for this is actually for me to elaborate back to this chart, right? I mean, this Excel table right here that extracted from Morningstar. So it's pretty confusing, yes, because it's leading by 3 quarters. All right. So with that, I hope you're staying safe and happy investing and trading. So yeah, see you in the future.